Is the home loan crackdown going to crash the Australian property market? I'm Biko Konstantinos, and that's what we're going to discuss today. My goal is to support your investing with quality, up-to-date market analysis. So if you enjoy this content, please give the video a like and please consider subscribing to my channel, as I'd love to have you on board so we can discuss all things investing. Please stick around because we're going to go into what's happened in the Australian property market and also where to from here. So what's changing? Well, APRA, which stands for the Australian Prudential Regulation Authority, has increased the minimum interest rate buffer that it expects banks to use when assessing the serviceability of home loan applications. So what that means is, if the average home loan rate is around about 2%, previously the banks would add on 2.5% to make sure that the borrower could afford that additional rates on top of their home loan rate. So for example, if the rate that they could get was 2%, the banks would add on another 2.5, which would take it to 4.5, and they would make sure that the borrower could afford a 4.5% based on the amount that they're borrowing. So in this change, the 2.5% addition is going to be increased to 3%. So it's an increase of 0.5% or 0.5%. And so if a borrower was able to borrow at an interest rate of 2%, now the banks will add on 3% to check or review if that borrower would be able to afford their borrowing or their loan repayments at that higher level. So at a 2%, you'd add on 3 and they would look at 5% serviceability. Or if you can get a loan of around about 2.5%, which at the moment you'd probably be getting from the major banks at their comparative rate. So 2.5, add on 3%, takes you to 5.5%. So the banks will be actually looking, could you afford to repay this loan amount if you were paying 5.5% principal and interest? So that's the actual change. It's not a massive change, but it will affect those who maybe the banks previously were going to lend them a large amount. Maybe they were going to lend them $800,000 to borrow. From November 2021 in Australia, those same borrowers may no longer be able to get that 800,000 from the banks. It may be in the 700,000s. So that's the difference. That's the change. So it's a small tightening up so that you won't actually be able to borrow as much as you were, say, up to October from November onwards. According to APRA, the banking system is well capitalized and lending standards overall are holding up quite well. Increases in the share of heavily indebted borrowers and leverage in the household sector more broadly mean that medium-term risks to financial stability are building. So this is the reason for the increase in the buffer for loan serviceability. And this is the reason why APRA, who previously were not interested in doing anything to try and stall or cool down the housing market, have suddenly gotten involved. Has Australian property affordability deteriorated recently? Well, the answer is a definite yes. Now we're going to have a look at this article by Dr. Shane Oliver, who is the head of investment strategy and economics of AMP Capital. We're going to go through some of the reasons why Australian housing is so expensive and why affordability is really starting to deteriorate. As you can see by this chart, the average Australian property price are at record highs. So back into the 80s, we've got the average capital city prices. So this red line is the 8 capital city price rises. So we can see from about 100 here, we've slowly increased, but recently we've really started to ramp up that increase. So property prices have really started to ramp up. So from an average of about 100,000, now the average has risen to above 1 million. And that rise has risen dramatically since 2000 and extraordinarily since the about 2020 after COVID. This chart shows us that both the deviation of real Australian house prices from their long-term trend is this red line is way above the average, and also the household debt as a percentage of annual household disposable income is also very high and keeps rising. So that paints a bit of a picture for us that house prices and household debt have gone up both at the same time. So let's look at the reasons why this article is putting forward about poor affordability of the Australian housing market. So over the last 20 years, average capital city dwelling prices rose 200% compared to an 82% rise in wages. And over the last 10 years, dwelling prices have risen 58% and wages by only 26%. So there's a massive disconnect between the rise in Australian property compared to the rise in wages. Property rises are dwarfing what wages are actually rising, and this is widening the gap between the average wage and the average price of an Australian house. The ratio of average house prices to the average household disposable income has more than doubled over the last 30 years, from around 3 times to around 6.5 times. Australia is even becoming one of the most expensive countries for property in all the world. While interest rates may be at record lows, the surge in prices relative to income has seen the ratio of household debt to income rise nearly threefold over the last 30 years, going from the low end of OECD countries to the high end. And this is making it far harder for first home buyers to get into the market. It now takes approximately 8 years to save for a deposit in Sydney and nearly 7 years in Melbourne. So what's caused this massive price boom? Well, according to this article, the gains have been driven by record low mortgage rates, buyer incentives, a tight jobs market, a desire for more home space as a result of the pandemic and working from home, numerous government home buyer incentives, the fear of missing out, and lower than normal listings. And this has pushed the average prices to record highs and real house prices to around 23% above their long-term trend. Now in Australia, this has been exacerbated by our generous tax rules. Investors have negative gearing where they can claim any tax losses against their income. We also have the capital gains tax discount. So if you hold an investment property for over a year, you only have to pay 50% of capital gains tax. And there's a number of first home buyer incentives and other incentives like that that has created an environment that is extremely supportive of property ownership, whether it be principal property or whether it be investment property. Australian property ownership is very well supported by our generous tax legislation. Now, this post-COVID boom in real estate is not limited to Australia only. Although Australia has seen spectacular gains, which is some of the highest across the world, there has been basically across the board a global property boom. since COVID. And much of those factors that were supporting Australian property rises have also affected global property rises. So it is definitely not just related to Australia only. It's a global phenomenon, and it's creating a bit of a global issue as well for all the countries in the world that are considering what they can do regarding housing affordability. So what's the problem with these massive price rises in property in Australia and across the world? If the rises were gradual, in line with inflation, then it would be good. It would be healthy. It would be increase the wealth of property owners. But what happens is when very high house prices and debt levels relative to wages, this can occur and real issue. So what happens is the extremely high levels of debt can create financial instability should something make it harder to service loans. And the next thing is the deterioration of affordability is resulting in rising wealth inequality. So that's basically from those people that are born now compared to those people that were born, say, in the 80s, or way before that, in the 60s, who were buying property in the 80s and 90s, etc. There's a massive wealth gap because, like we saw before, properties compared to wages back then were way less than they are now. And so there's going to be this very large wealth gap between the property haves and the property have-nots. So for example, in the last even 2 years, the average property in Australia might have risen 200,000 or even 300,000. That's in the major cities, say for example. Some major cities way more than that. Some rural areas less than that. But average, they've risen a lot. So for a principal homeowner, just by having that house, those owners have been able to make, say on average, maybe 250,000 tax-free. So if you consider someone who hasn't bought a house as yet, then they have missed out on the equivalent of $250,000 tax-free just by owning a property, owning an actual house on a block. And for them to make that $250,000, they would have had to have income well in excess of that amount because they get taxed on their wages. And so that causes a real massive gap to start getting created between the haves and the have-nots. And if you consider someone who has a principal place of residence plus maybe 2 or 3 investment properties, yes, you can multiply the gains. Yes, they might pay some capital gains tax, but they get a discount on that. So they've still made massive gains that have been multiplied, and that has even increased the gap more than those who do not have any properties whatsoever. So that could cause a real sort of a disparity between the more wealthy and the very less wealthy in Australia, and it could become a bit more like what happens in America, where we have some massive differences in wealth. It could create a future where those who don't have property, or their parents didn't really have property to be able to hand down, that you have these two classes, and it does become the have and the have-nots. And those who don't have might struggle in the future there as the rents keep increasing. They might be dependent more on the government for support. So it could create a whole lot of domestic issues going forward for those that are struggling without the benefit of these massive property gains and the generous property legislation and tax that supports the whole property market. Demographia, International Housing Affordability. This article here has some very interesting information and basically says that even the middle class are going to struggle with housing affordability going forward. So what that's saying is those middle class income earners who primarily have a decent job, earning probably the average wage, they're going to struggle going forward to own property, to own houses, on blocks, etc. So if they're going to struggle, you can imagine how difficult it's going to be for the low income earners, those in low paid jobs, such as hospitality, such as casual work and things like that, retail and things like that. So this article really paints a bit of a difficult picture for housing affordability, which will affect a lot more people going forward, and all young people, all the generations that are young at the moment or being born are going to face some real difficulty in property ownership going forward. So the article goes on to say that we've had across the globe 3 decades of worsening housing affordability. So it's kept getting worse and worse and worse. So that's based on the price of property compared to the price of income, the average incomes across the globe. So there's been a bigger and bigger gap. This table here in the article is really interesting, but because it's ranked major housing markets by most affordable to least affordable. And this red section with a ranking above 5 is what is classed as the least affordable. And it goes, it looks at the median multiple. So that's the price of a property over the average median income. So China, Hong Kong is the highest, where we've got 20 times the median income, followed by Canada, and then followed by Sydney. So Sydney is the 3rd least affordable city in the entire world, according to this table. Then we've got New Zealand, Auckland. Then we've got Toronto, Canada. So that second one was Vancouver. And then we've got Melbourne, Victoria, 9.7 times the median income. Adelaide, South Australia is 7.7, just looking at Australia now. Brisbane is 6.6. Perth is 6. So we've got 1, 2, 3, 4, 5 major cities that are the least affordable across the globe. So that's really quite frightening how Australia has gotten so unaffordable in property. So what's happened? We've discussed it before, but it's a bit of a worry. And as you can see by all the articles going forward, there's many concerns regarding the Australian property market. There used to be the old dream of owning your own property, the Australian dream, owning your own house. You'd pay off your mortgage and you'd live in that house in retirement. That dream may not become a reality for some young people, or maybe a lot of young people, and even some middle income earners going forward may not even become a reality for them. Some very startling figures from this Domain article states that Sydney's median house price of around 1.41 million is 23 times higher than the median employee income in Greater Sydney. Melbourne house prices are almost 18 times higher than local incomes, whereas Brisbane, Adelaide, Hobart and Canberra are also at least 10 times higher than incomes. So that's startling figures of shows how high house prices have gone, yet wages and income has not increased much at all. Do property prices always go up? In general, across the globe, yes, there has been rises in general across the past 30 years or so. However, it doesn't always come without risks. Now, Australians might think, real estate extremely safe, always rise. We've only ever seen some very, very small downturns, but other countries have had major disruptions. Looking at this chart of real house prices in Ireland, we can see that in 2006, there was a major peak after what was called a big bubble that occurred in real estate over in Ireland, which was due to very easy access to money, wild speculation. And then they had prices that dropped roughly 50%. Now, can you imagine what that would do in Australia if we had prices that dropped around 50%? And prices now are only starting to come back. If we go through it a little bit now, a bit further to 2021, they're only starting to now come right back to that peak back in 2006. So that's incredible when you consider what Australia has done compared to somewhere like Ireland that had that massive downturn. Many other countries in the GFC had larger downturns than Australia had, a USA, the UK, etc. So there is possibilities for some major crashes and downturns in the property market. In Australia, we've been fortunate, and we've also had what we described before, some very, very supportive environment for real estate in Australia that basically there's no appetite so far to let the property market in Australia fail. There was extremely supportive during this last COVID pandemic. The government basically threw everything it could to make sure there wasn't any sort of crash or any issues in the property market. And maybe that's also created an imbalance where they've just shot up extraordinarily high. So what's the risk of the Australian real estate market crashing? Now, I don't really listen too much to economists' predictions or any other predictions in the market, because in my mind, no one really knows for sure what's going to happen. And the reason why I say that is because when the pandemic hit, there was no one economist that was actually predicting the massive rises that ended up happening. So they all got it wrong. So going forward, there's no guarantee that predictions or any economists or anyone else really knows exactly what's going to happen, especially in these unprecedented times where governments are struggling to balance between stimulus, between inflation, between record debt levels, and multiple factors all occurring at the same time. Now, for there to be a crash, there are a few things that I think would need to occur. One is increased interest rates. So if there was interest rate increases that happened quite quickly, that could put a definite dampen on the market and could lead to significant falls in property prices. But as the RBA in Australia has said, they definitely do not want to raise interest rates in the short term. They've basically said 2024. However, predictions, like we said before, you can't trust them. And so we don't know when interest rates might rise, but I think the odds are that from this position where we're at historically low rates over the past 30 years, that the next the next direction will be up for interest rates. So that's one factor that could jeopardize things. The other factor would be increased unemployment or issues with the economy in general. So if the economy starts to go bad or into recession, could create more job losses. So increased unemployment would most likely lead to more inability to service loans for those people who have lost jobs. And that way, that could certainly put a dampener on house prices if there's some forced selling in the future. So unemployment and the state of the economy will also be a very important factor. And another factor that I think is critical going forward for Australian property is the taxation policy on property. If there was to be a change in regards to any sort of our property taxes, like negative gearing, capital gains tax discount, and some of those key property legislations, that could have a massive effect on house prices as well. So where to from here for the Australian property market? Well, there's going to be a federal inquiry into housing affordability and supply in Australia. So from the Parliament of Australia, they basically took submissions regarding this issue up until Monday the 13th of September. So the federal government, I think, has started to realise that there could be an issue going forward regarding housing affordability. Well, I think they've known for a long time that this could be an issue. They've seen that Australian markets are basically some of the highest, most expensive in regards to affordability across the globe. So it's certainly high on the radar in our government circles. So that's going to continue to be a very critical factor going forward. Now, lockdowns are starting to ease. 2022 should see a much freer Australia in regards to lockdowns from COVID. The whole impetus now, the whole momentum is about opening up, being able to travel again, opening up overseas borders. So slowly it looks like we're going back to normal regarding travel. Not being locked down in your own house should start to ease a bit of that demand or that desperation to purchase a house that's suitable for working from home and things like that. And just that normalcy of being able to travel may reduce a bit of that craziness to just purchase properties in Australia, as people will be able to start traveling and things like that. Now, a election is coming up, federal election in 2022, and housing affordability and rising cost of living is going to be some massive key issues that will be debated hotly in that election. Because it affects so many people, housing affects so many people, the inflation that's happening right now that's causing price of living to go up, that affects so many people. And because of inflation and because of those rising costs, there could be a requirement to lift interest rates earlier than previously thought. So there's a whole lot of factors that will be in play, and these will be played out in the election coming forward. There might be some talk about changing some legislations to deal with some of these effects. So that'll be interesting to see, and that'll definitely have an effect going forward on what the governments decide in regard to tackling this issue. The other thing is stock markets could come under pressure. Stock markets globally are at very expensive levels compared to their average over many years. So they are expensive at the moment, and things like inflation and interest rate rises could put a dampener on the stock market. And if the stock market was to have a major fall or a decline, then that actually could affect the property market as well, as wealth in general will, if wealth is deteriorated due to stock market falling, then people or investors might feel less comfortable to make investments into the real estate market. So that also could have a dampening effect on the market going forward. So what's my thoughts on the Australian property market going forward into 2002, 2023? Well, in my opinion, there has to be a bit of an easing of these massive rises. I can't see it continuing at the same level. I think the risk is probably a little bit more weighted to possible falls in the future. However, at this stage, there doesn't seem to be anything that is showing that those falls would be large. I think the risk could be either change in legislation, some quick rises in interest rates. It could be some bad economic data or some rises in unemployment. If some of those things happen, yes, I think there could be some major risks to the Australian property market. But at this stage, none of that looks like it's happening. Loans are quite well serviced in Australia. Banks are well funded. I don't see any sort of financial crisis coming at this stage. I find it hard to see that these massive prices can continue. These massive price rises can continue forever and a day, because there's this whole section of low to middle class income earners who may be priced out of the market. And if they're not able to purchase properties, then the demand will only be at that higher level, people who already have properties or investors, and eventually that demand might wear out and you might see some dampening of prices. It's hard to know where property prices are going to go from here for the Australian property market. There's so much uncertainty still in the global markets. I think a lot of factors have led to these massive increases in prices across the globe and in Australia that is unprecedented. Extreme low mortgage rates is probably the biggest factor. You could get a loan of $1 million now, and as long as you're on a middle income, you could service that loan. And never in history has that really been the case where you can get so much of a loan. So if that starts to change, if interest rates go up, that's possibly the biggest factor that will affect property prices, and the biggest factor that could probably cause property prices to drop going forward, especially if those interest rate rises come closer or faster than people expect. Then I think that's the biggest risk to the Australian property market. If you want to know how much of a big deal the Australian property market is, all you have to do is go to a barbecue or a party, and inevitably there'll be multiple conversations about the real estate market, about properties that have sold, about what someone's intending to do or has done. So that is a clear example that Australians are obsessed with property, obsessed with the real estate market, and it is a massive deal to a massive number of people. I'm Biko Konstantinos, and I'd love to hear your thoughts on the Australian property market or even the global property market. Do you think it's going to continue going up? Do you think it's going to crash? Or are you in the middle? Thank you so much for watching this. I really appreciate your time, and I'll catch you next time.